Today, the bipartisan group of senators known as the Gang of Six unveiled their budget plan. The bill would cut the deficit by $3.7 trillion over the next 10 years. It calls for $500 billion in immediate spending cuts. It also includes entitlement reforms and $1 trillion in tax increases. Earlier today, President Obama spoke from the White House, praising the bill as a balanced approach.
Today, a group of senators, the Gang of Six, Democrats and Republicans, I guess now a Gang of Seven because one additional Republican senator added on, put forward a proposal that is broadly consistent with the approach that I've urged. What it says is we've got to be serious about reducing discretionary spending, both in domestic spending and defense. We've got to be serious about tackling health care spending and entitlements in a serious way. And we've got to have some additional revenue so that we have an approach in which there is shared sacrifice and everybody is giving up something.
The president also urged congressional leaders to move swiftly and end the stalemate.
My hope, and what I will be urging Speaker Boehner, Nancy Pelosi, as well as Leader Reid and Mitch McConnell, is that they tomorrow are prepared to start talking turkey and actually getting down to the hard business of crafting a plan that can move this forward. So I think it's very important for in these next couple of days to understand we don't have any more time to engage in symbolic gestures. We don't have any more time to posture. It's time to get down to the business of actually solving this problem.
The president's remarks came before House Republicans voted on their cut, cap, and balance plan. The bill is unlikely to pass the Democratic-controlled Senate. Joining me now from Washington is Senator Rob Portman. He is a Republican senator from Ohio, also a member of the Senate Budget Committee. I am pleased to have him back on this program. Welcome.
Charlie, good to be on with you again.
This is what Politico has said of you. Portman has proved himself a valuable asset to top GOP debt negotiators, and he's positioned to take some credit for contributing behind the scenes to the most significant issue of the year so far, a feather in the cap of a rising Republican star who some observers say could make a strong 2012 vice presidential contender. Forgetting the politics at the back end of that observation by Politico, you have played a role here. So tell me what you think of the Gang of Six proposal that the president acknowledged today and that a number of senators came forward to say this is a very, very positive development.
Well, it was a positive development on a few different fronts. One is it's bipartisan, which is something rare these days, and so you had Republicans and Democrats coming together, four of whom had served on this fiscal commission that the president had established and which reported late last year. Second, they actually came up with some changes in terms of the spending going forward that are fairly significant, and that is short-term but also longer-term. They looked at the entitlement side. They didn't do as much there as many of them would have liked to have done or that needs to be done, but they got to start. And third, they showed that even in the short term, there are things that can be done and should be done, so it could help with regard to this debt limit discussion. So I think it was timely. I'm glad they came forward with their proposal, and it was very well received by about 50 or 60 of us who stopped by this morning for a briefing.
So is it going to be, the first step towards a bipartisan agreement?
Well, I don't think that any of them would say that this was designed to deal with the debt ceiling issue. This was, again, a product really of the Fiscal Commission. Four of the six of them have been on the Fiscal Commission, and it's not intended to solve that problem, but I think it can help with regard to that problem because it lays out, again, through a bipartisan effort, ways to reduce spending, both short-term and longer-term. I do think that in terms of the debt limit discussion, there would need to be even more upfront, following the formula that Speaker Boehner has laid out, basically saying that over 10 years there need to be adequate cuts and equal cuts to the amount of the increase in the debt limit. Their initial reductions in spending are about $500 billion, which used to be a lot of money here in this town. But if you look at how far that would extend the debt limit, it would be probably less than year end. So there needs to be more done short term. This cannot be, in my view, a substitute for what has to be done to to extend the debt limit.
Okay, but it's more likely now, this is the question I'm trying to get answered, it is more likely that we're seeing with this gang of six recommendations so met with such approval, more likely the direction that the conversation is now rather than McConnell-Reed.
Well, I think it is, and that's probably positive because it's some real spending reductions up front and then a longer-term commitment, specifically telling the committees of Congress you have to report within a specified period of time, 6 months, on things like tax reform, which is an important part of this because part of this is getting the economy moving again, but also on the specific spending reductions. So I think it's a positive sign. My only point, Charlie, is I'm not sure it's enough for the short term here because I do think that the markets are watching very carefully. If you read what Standard & Poor's and Fitch and Moody's and the so-called credit agencies are telling us, it's not just that we need to avoid a default, which we certainly do, and we need to extend the debt limit, but we need to do something about the underlying problem. So I think Congress needs to get its act together here in the next few days and provide even more short-term spending restraint in order to extend the debt limit until next year, which would be consistent with not just the Gang of Six plan today, because it has, again, 6 months for the committees to do their work, but also with this idea that Senator McConnell and Senator Reid have of setting up some sort of a select committee over 6 months to look at these longer-term problems.
Does it go far enough in terms of the kinds of issues that Republicans have focused on, entitlements?
No, it doesn't, and again, I think the Republicans in the group would acknowledge that, but it's a start, and that's important because, as you know, prior to this time there had been a hesitancy to even touch the programs, and yet there's an acknowledgement, I think, broadly that they are unsustainable in their current form. As important as these programs are, they are simply not sustainable, and so it's a start down that path. It's also an acknowledgement that on the revenue side there needs to be tax reform in order to begin the process of growing the economy. It's not just about finding more revenue, it's about finding more revenue through economic growth, which, again, I think is widely acknowledged now. We need to do a number of things to get the economy moving in order to deal with this deep fiscal hole that we find ourselves in.
Do you accept the President's argument that we need to look at deductions, corporate deductions in a variety of places in order to have some kind of contribution on the revenue side?
Well, I agree with the President that there are too many credits and deductions and exclusions in the code. The ones that he has pulled out would be examples of ones that could be eliminated, along with lowering the corporate rate, which, as you know, Charlie, is the highest in the developed world. So among our competitors, our trading partners, right now America has a relatively high rate, meaning that jobs are going overseas because companies are choosing to go to lower tax rates countries. They're also parking a lot of their cash overseas rather than bringing it back because of our high corporate rate. So this is part of the tax reform that the Commission recommended. This was the President's Fiscal Commission that the Gang of Six has now recommended, and it would be consistent with what the President is talking about so long as the rate is also reduced, commensurate with the reductions of these preferences. That will help a lot in terms of getting the economy moving. There are a lot of different analyses out there, but I think even the most conservative analysts would acknowledge that this is going to result in more economic activity in this country and therefore more jobs and more revenue.
Doesn't the President, hasn't he signaled that he's prepared to accept a reduction in the corporate income tax in as long as there are deductions and the closing of some of the loopholes?
He has in the past, and as you may know, the Treasury Department did a lot of work on this. They never came out with a proposal. It was not included in his budget. I'm a little confused as to why, because again, I think it's a classic example where Republicans and Democrats could come together. The Gang of Six, for instance, calls for the corporate reforms and the lowering of the rate to be revenue neutral. But again, it will be helpful in terms of growing the economy, therefore will help in terms of the unemployment issue and will also help in terms of revenue because these reforms are just so sensible to make the code more efficient and to attract more jobs and more investment to the United States.
What do you say to your colleagues on your side of the aisle that they don't believe that the consequences of failing to raise the debt ceiling by August 2nd will have the dramatic impact that the President and Ben Bernanke and others say?
Well, it's something we need to avoid for a few reasons. One is in terms of the financial markets and our economy, I believe that we will see negative impacts. In fact, I think we'll see it even in the next few weeks if we don't take action prior to August 2nd. I think that's broadly believed to be true by economists. Second, with regard to the benefits that are paid by the government during the period after August 2nd, there is some risk. In other words, the government will be on a cash flow basis. So without having that line of credit out there, the ability to borrow, some of my constituents and others around the country will be put in a very tough position. And third, I think it'll be negative in terms of getting anything done on the spending side, honestly, because I think what will happen is similar to 1995, you recall that, Charlie, when there was a government shutdown, and Republicans ended up, because of the political pressure, not achieving the objective. At that time, again, it was a spending issue. We need to reduce the spending, because if we don't, again, it is something that the credit agencies and investors around the world are looking at. We have to get our fiscal house in order. It is necessary but not sufficient to extend the debt limit. We've got to also deal with the spending, and my fear is that if we go into this post-August 2nd period, it makes it even harder to deal with the spending because there'll be a lot of political pressure simply to extend.
What's the difference between the amount of spending cuts that you would like to see and where the president is prepared to accept?
Well, I'm not in the negotiations today, and I hesitate to talk about even what I've heard from some of the negotiators, but as a general matter, there are three areas where you can see a disagreement on the spending side. One is what the spending ought to be for next year and going forward on the so-called discretionary spending, the stuff that Congress appropriates every year. And the notion that we can simply freeze that spending, I think, ignores the fact that we have increased that kind of spending about 24% over the past few years, and we need to see a reduction in that spending. This was the debate over the continuing resolution, which, by the way, would come up at the end of September again if we don't deal with it now. So that's one area where I think we need to see an actual reduction of spending, not just a freeze in the spending that Congress appropriates every year. Second is in the area of entitlements. There, again, the President has been hesitant to accept any entitlement changes short of tax increases, which many of us fear would hurt the economy at this time. So by increasing the burden of taxation on the economy, we fear we're going to worsen an already weak economy. And so the President isn't willing to touch it. It has to be touched. And again, the Gang of Six does so, I think, in a politically courageous way, but also in a necessary way to say we need to begin to deal with the unsustainable growth on Medicare, Medicaid, Social Security.
Okay, but the President has said he praised the balanced approach of the Gang of Six recommendation today.
Yeah, I think his response was encouraging in that regard, but we still haven't seen a proposal. One of the things, Charlie, I think you and I have talked about before is you need to see specifics from the executive. You need to see presidential leadership. The budget that the President sent forward, which is his 10-year vision, was voted on the floor of the Senate. As you know, it was voted down 97-0 because it not only didn't deal with the spending problems, it actually made it worse. The President also has not submitted a single specific proposal on dealing with the entitlement challenge we face. So I'm encouraged by his words today, as I often am, but we need to see some action and some leadership and some willingness on the part of the President to help in terms of taking the lead. Now, again, we have a fundamental disagreement, many of us, with the President over the revenue side, but that shouldn't preclude us from moving ahead with tax reform, getting rid of these deductions he's talking about, lowering the rate, and dealing with the spending problem. And we can do so now, again, for the relative short term, dealing with this over the next year to move the debt limit forward, and in the meantime come up with more fundamental changes on a bipartisan basis, as this Gang of Six has recommended. It seems to me that's the logical solution to our current problem we find ourselves in. We do not want to extend beyond this debt limit period. We do not want to default, but we do need to have these spending reductions in place. Otherwise, we really haven't solved the problem, and we will continue to have a real threat of a financial crisis.
What do you think Eric Cantor would think of the Gang of Six recommendation?
Well, I don't know. I mean, one of the issues the Gang of Six is dealing with is the fact that it's been a Senate-centric process, and the House has not been involved. And so there is, I think, an opportunity for all of us to come together even the next few days, take a hard look at it and see what can be worked into the debt limit discussion, but there needs to be a longer education process with House members who frankly haven't had the benefit of this. I've attended a few of the briefings, as have many of my colleagues on the Senate side, but the House members have not had that opportunity.
Tell me what your optimism tells you and what your pessimism tells you at this moment.
Well, you have to be optimistic because the alternative is unthinkable, which is that we would in fact fall into this post-debt limit period. We would ultimately default on some of our obligations, and there would be, again, a financial market response and an economic response that would hurt all Americans. And for instance, if interest rates were to go up, as some would predict, by a point or two, this would affect everybody who's got a car loan or a student loan or a mortgage, and it's obviously going to hurt small businesses who are out there trying to create jobs, and they need to get credit. So you have to be optimistic that we're going to avoid that. And then you also have to be optimistic that common sense will prevail, that people realize that it's not just about extending it, it's also about dealing with the underlying problem. And if that doesn't happen, in fact, you have some of the same problems because, again, there's such a huge imbalance now between revenues and expenditures. I talked about the domestic discretionary spending increasing by 24% over the past 2.5 years. Obviously, that's not sustainable. The fact is that we have to get the spending down. Historic levels are about 20 or 20.5% of our economy. Right now, we're at about 25% of our economy. And so I'm optimistic because I feel like we have to address this issue. The pessimism comes from the fact that when you look at the numbers long term, and Charlie, I'm going to do something I did with you last time I was on the show and probably didn't invite me back for a while because I had too many charts. But here's a chart.
Yes.
And this is the pessimism.
Right.
And it shows very clearly where we're headed. This is the Congressional Budget Office, their projection of what the debt will do if we do not deal with these issues. And it's obviously unthinkable that we would have these levels of debt because our economy would be destroyed through this kind of huge burden of debt. You look at what's happening in Greece today, and it would pale in comparison to this. And of course, we can't let that happen. But my pessimism has to be that the problem is bigger probably than anyone in the political world is really acknowledging. These liabilities are huge, they're growing. And if we don't deal with them, again, we're going not just to take away the opportunity for our kids and grandkids to have the opportunities we've become accustomed to, but also the global economy will be also hurt very, very badly. America continues to be the biggest economy in the world. We should be driving this global economy and be that beacon of hope and opportunity. So that's the pessimistic side, is that the problem is truly big.
We have begun to have in this country, in Washington and around, a much more serious look at where we are in terms of our economic health, and that's recognition is the beginning of some kind of recovery.
I think you're right, Charlie. We're on that slow process. I guess you start by acknowledging the problem, right? And hopefully we're getting out of denial and acknowledging it. I wonder sometimes, but that's the first step. But then we have to do something about it. And we're under the gun right now. To be honest, if we don't get our act together and both extend but also deal with the spending problem, I fear there will be a consequence that will be quite negative. Let me give you one example of what I think could happen if we don't deal with this problem. Let's say interest rates do go up a point or two. Every point in interest rate is another $130 billion in deficit spending per year, so $1.3 trillion over 10 years. If interest rates go up a couple of points, 2 points, closer to the historic averages, that's another $260 billion a year, but $2.6 trillion over 10, which of course erases all of the gains from the so-called $2.4 trillion plan that's being talked about. So that's how serious this is. We have to deal with the underlying problem. We have to be sure we're growing the economy. We have to be sure that we're not just focusing with our green eye shades on the spending issues, but also on how to grow the economy to get more growth, more economic activity, and more revenue in a way that helps Americans in their daily lives. So those are our challenges.
Yeah. The president of the World Bank, Robert Zoellick, had a sharp criticism of U.S. trade policy. Did you agree with it? Did it resonate with you?
Well, I didn't see his criticism, but I did meet with Bob Zoellick last week. We're friends, and as you know, I succeeded him as trade representative.
That's why I'm asking the question.
If it's along the lines of what he said to me, his criticism is we're not engaged. Right. The United States is taking a back seat, and it is unfortunate because there are over 100 trade opening agreements being negotiated around the world today, and the United States is not a party to any of them. There's one regional negotiation we're part of, but frankly, it's not going to be the kind of success that we have to open markets for our workers, our farmers, our service providers. And we're taking a pass, and we're losing market share every day. 95% of the world's consumers are outside of our borders. Yes, trade needs to be fair. We need to be sure we're enforcing the trade laws, but we also need to expand our exports. We rank somewhere below Ethiopia, I'm told, in terms of our exports per capita, well below any of the other developed countries that we trade with, well below China and Korea and countries that we hope to trade with more, in the case of Korea, through this
right.
Korean trade agreement. So, one, we need to pass the 3 agreements that the President has already indicated he supports. He needs to send them to Congress right away. That's the Korean agreement, the Colombian agreement, and the Panama agreement. Why? Because they're good for us. They're good for American workers, American farmers. And second, we need to re-engage on the world stage to be sure America has a place at the table, that as new market share is being opened up, we have the opportunity to allow our workers to take advantage of that. So I am concerned about the direction of trade policy, and I'm hoping that we can address that in the context of passing these 3 agreements, and at the same time we could give this president, who's of another party than I am, but we ought to give him the trade promotion authority that enables him to complete these agreements, because they're good for our economy. If you look at what's happened in terms of the very disappointing growth over the last couple of quarters, without trade, it would have been far worse. Trade is one of the few areas where we've seen some benefit because we have increased exports, partly because of the value of the dollar going down. But this is an area where we should be doing a lot more. We should be a bigger trading country by exporting more of the stuff we make here. We should be the largest exporter in the world, which we are in many categories still, but also per capita, we are well behind all of our trading partners. We should be way ahead.
I thank you for joining us this evening.
Thanks, Charlie.
Don't stay away so long.
I look forward to the next one.
Thank you. Senator Rob Portman, Republican from Ohio.